Welcome back. Well, let's get straight to the next management. GNA Axles, well, the numbers in the past quarter were a little bit subdued, with margins contracting as well. Profit as well did see a bit of a knock. But to understand what's the way ahead, I think we have the MD and the CEO of the company who joins us on the show. Mr. Ranbir Singh is joining us. Hi, Mr. Singh. Good morning. Thanks so much for joining in. Good to speak to you after a while. Well, the first half of the year has been a little bit flattish with actually a bit of a contraction. What's the outlook for the full year? Could you tell us in terms of revenue guidance, what could it be? Earlier, you were guiding for, I think, high single digit. Now, what do you look at? And also margins, they have actually been a little bit under pressure. So what's the band we look at for the full year?
Nigel, very good morning. Thanks for inviting me today for discussions on the results. As earlier, we have given the guidance single-digit growth, but we are hardly able to match the last year's numbers as so far as top line is concerned. And if you see overall market, because of very high base of CV market last year, so this year there is hardly any growth in domestic market. It is hardly 2% growth in CV market. On other hand, as you know, our high dependency upon off-highway in domestic market, our revenue, domestic revenue 70% is from the off-highway. That market has dropped by 10%. And plus, they are maintaining huge stocks and inventories off-highway market. And we have no hope in next 2 quarters or next quarter it will be recovered because of they are carrying a lot of inventories. So whatever new products we have developed for LV, light vehicles, and other CV components. So we have whatever gap was there for 10% in the revenue that we have recovered from new components. So that's why we are able to match the numbers. As so far as profitability is concerned, if you see half yearly figures, our EBITDA last year it was 13.91, whereas this time it is 14.69. There is a slight improvement, but quarter to quarter basis there is some effect. The reason of that last quarter's effect on the EBITDA is basically the depreciation, because we are continuing on a growth part to invest money to increase our capacity.
Mr. Singh? Yeah, Mr. Singh, I could sense that you're sounding a little bit cautious about this year. But just to clear out a couple of basic numbers, we appreciate you breaking up the segment-wise domestic revenues. Off-highway market is a little bit under pressure. But what do you end this year with? Revenues for FY24 will be similar to FY23. Is that what you're trying to tell us, or will there be a growth? And also, what should the margin band? What should the margin band be for the year? Please go ahead.
Our historical margins are between around 14.5% that we are already maintaining if you see our half-yearly data. And so for top line, we are targeting the same, that is single-digit growth only. But it all depends upon the Q3 and Q4 numbers. But definitely there won't be any much increase in top line.
Mr. Singh, last year when we spoke to you, at the start of the year rather, you said FY24 revenues will grow between 7 to 8%. And now you're saying that because that at the first half mark, your revenues are down 2% year on year, you will grow just about single digit. Can you tell us whether it will be low single digit, mid single digit, or you are still looking at 7 to 8% itself? Because from the looks of it, low single digit looks more doable. I mean, would that be the correct reading?
There is another catch in that because of steel price drop, material cost drop, it is not reflecting. But practically in numbers, it's 7 to 8% we have grown as compared to last year.
That's in volumes, right?
Yes.
So this year, what will your volume growth be? And as a result of which, what will your overall price realization be because steel prices are lower? Can you give us a sense?
Yes, our growth will be in the tune of, in volume terms, it will be 10%. Top line might not grow. It will offset that growth.
Okay, so top line is absolutely flat with 10% revenue growth, volume growth rather. And you said that 70% of your domestic business is from off-highway. You also recently commissioned the SUV plant, right? What exactly is the current capacity utilization of that plant? And by when does it go to full utilization?
Very first capacity is 100% utilized, means more than 80%. The next phase of capacity is completed. That is, initial capacity was for 600,000 components per year. It is already utilized. And next phase is we are yet to complete in a month or so. That is additional capacity of 600,000 pieces. Which we are going to complete in this quarter.
Okay, so the 600,000 pieces in the first stage, how much does it contribute in revenues?
That contributed more than 80 crores.
More than 80 crores on an annual basis?
Yes.
Okay, and the second stage will be another 600,000, so you'll go to around 1,200,000.
Yeah, that's almost we have completed this month.
So that starts contributing in FY25 in full power?
Yes, next year it will give us good revenue growth.
So approximately from this SUV segment itself, you can, at peak levels, it can do around 160 crores. For FY25, how much do you think it can do?
On year basis, it will grow from 60 to 70 crores per year in value terms.
Okay. So this year it will do around 80 crores. Next year it should do another 140 to 150 crores. Are we getting those numbers correct?
Exactly, Nigel.
And finally, before we let you go, Mr. Singh, you said 3 to 4% of your revenues are likely to come in from the electric vehicle space. Where does that number stand at right now? And what kind of, color can you provide us?
At present, we are in CV and off-highway, as you know, in SUV also. In domestic market, it's hardly any growth in this segment. In Europe and US also, this hardly 1 to 2% vehicles are out of electric. So whatever our existing customers, they are demanding, so our capacities are intact and we are fulfilling their requirements. It's not more than 1.5%.
Okay, all right. And your capex for the year, normally what was the subsidy? 80 to 100 crores? Is that the number that you normally are doing with regard to per annum capex?
Last year, we have declared in 3 years, we will invest over 250 crores. Out of that, 125 crore already invested. If you see my numbers, our even depreciation has gone up. So next 1.5 years time, another 125 crore will be invested.
We appreciate you joining in, Mr. Singh, and always fielding all our queries. Wishing you all the best. It appears things are a little bit jittery on ground, but you're saying for the following year, at least FY25, you're expecting things to revive and margins could hold at current levels. Thanks so much for joining in.